What exactly are multifamily syndications? Let's find out. Hey everybody, welcome to Invest, Buy, and Sell with Jael. I'm super excited to talk about my journey in multifamily today, and I'm going to start from the very beginning. But before I get started, what is a multifamily syndication? Multifamily syndications are investors that pool their resources and their funds together to own and operate apartment complexes. So, you guys, if you're anything like me, you were just wondering who or had no idea who owns these apartment buildings that we go by every day. I don't know if I was thinking it was a major corporation or our city government council that owned these apartment complexes and buildings. But I was in for a rude awakening when I found out that investors just like you and I are actually behind the ownership of these major complexes that we see. And these syndications are put together by just investors that are ready to take the next step in real estate outside of the single family space. And I'm going to tell you a little bit about my journey, and we're definitely going to have a lot of parts to this series because I want to educate you all on a different part of real estate that I literally had no idea about 2 years ago. So I started in single family, of course, like most people do. And I started networking and going to a lot of different seminars and meetings to learn different things and different aspects of real estate. And I happened to stumble across multifamily. And commercial multifamily is any building that has 5 units or more. So after 4 units, you're looking at the commercial side of real estate in multifamily. And that is just a great way to diversify your portfolio and also assume less risk. With a single family home, I may have one tenant and I'm still a landlord and responsible for all of the things that happen at that property. And if that tenant decides to leave, I'm now on the hook for the mortgage and all of those other expenses that come with owning a property, like the monthly gas and electricity. Whereas if I own a multifamily unit or building, I have multiple tenants paying multiple rents per month. And if one person happens to go, I can still cover my costs and still have a management company taking over that property and handling getting the next person in there. So as you can see, multifamily allows you to assume less risk. And also you usually have partners in with you that can help you along the way. Whereas usually when you have a single family home, you are the sole owner and you are the sole decision maker and all the responsibilities are on you. So that's just a little bit why I was super excited to learn more about multifamily in that space in real estate. So as I started my journey, I wanted to understand how these deals in these apartments were acquired. How was it put together? So syndications have 2 separate groups that own and operate the property. There are partners that actually find and underwrite the acquisition to make sure that it's a sound investment. And it also, the underwriting, you're going to learn how much you're going to pay for this property that makes sense. So with underwriting, you're actually seeing if it's a great investment, and then you're going to come up with a solid business plan of how you're going to increase the value of this property. So that's one side of the syndication. The people who find the asset, acquire it, underwrite it, create the business plan. So after that group finds out if it's a great investment, they're going to go out and find other investors to see if they want to put their money into the property. So those will be passive investors. You don't have to have any experience, and you can still learn along the way by passively investing in multifamily. So I thought that was really cool as well. You get to use the experience of the people who founded, owned, and operated properties and come in and just bring your funds to make this property even better than it is already. So what's the difference between multifamily and single family? With single family, we're going to be looking at comparable properties, a property that's similar in year, in size, and make, in area, location. Whereas in multifamily, we're going to look at the income that the property produces. I always tell people that I look at multifamily as investing in a business? How can I increase the income and lower the expenses? If there were two apartment buildings side by side, I would not go to see what the other one is doing to determine the value of the one I'm looking at. I'm going to go into their expenses and their income, because two properties that look exactly the same, built in the same year, can have totally different values based on who's owning and operating that property. So I hope you get a little bit of an understanding about multifamily. I'm going to break down in future videos the general partners versus limited partner side, accredited investors versus non-accredited. But for now, I just want you to understand the nuances of multifamily and the differences between multifamily and single family. So let's jump into my journey. So I started out looking into multifamily by going to a seminar, hearing the differences that I just explained to you, why it's so important to invest in multifamily as well as single family, or just get started in multifamily right out of the gate, because it's a higher yield and return on your money, also great tax benefits and so many other things. So myself, my mom, Stacy Thomas, and our business partner, Adrian Gillis, decided we need to get a team together. We need to get some resources and really start seeing how we can acquire our very first apartment building. Let me tell you, it has been quite the journey. It has not been easy at all. It's been so many bumps and bruises down the road, but we refused to quit. And we just kept going on our journey, going to more meetups. As we went to these meetups, guys, we started meeting people that could sponsor our multifamily deals. So sponsors are a very important part of the deal, because they're going to be able to sign off on the loan, and that's based on their net worth as well as their experience. So finding people that can sign off on a huge $20 million, $30 million project for you is invaluable. People want to find sponsors that believe in them and that want to work with them. So we were like, great, we're acquiring sponsors, but we kept looking at a lot of deals, underwriting a lot of deals, reaching out to brokers who usually have these great multifamily properties. So our goal was to get broker relationships and get these properties before anybody else so that we'd have a better chance. Of course, the brokers were not taking us seriously. We had no track record. We didn't know the lingo like we should have. And they were like, let me see your credentials. When brokers ask for your credentials, it's because they want to see if you have a track record, and they don't want to waste their time presenting and giving you all of the financials for a property, and they don't believe that you can close on it. So we were hitting roadblock after roadblock. So finally, one of the great sponsors that we met gave us their schedule of real estate. They're like, look, if you're getting objections from brokers, share what we've done in our experience. So with that, our foot was in the door. We had a great way of getting brokers to send us these off-market opportunities and actually building those great relationships. So from there, we probably underwrote over 200 deals. Nothing was sticking. All of our offers were too low, and it just was super frustrating. We went through two sets of teams and groups of people that were in and out, but our core remained the same. So we realized that it was high turnover. We needed people that were full-time, and we needed people that we enjoyed working with and were a good fit for us and our personalities. Positivity and mindset is going to be super important when trying to acquire your first apartment building, because it takes a lot of patience and it takes a lot of grit and positivity to get that first deal. So we kept going, and finally the sponsors who allowed us to use their schedule of real estate came across a 44 unit in Lubbock, Texas, which is an extremely great and emerging market. Markets that you've never heard of can be really good for multifamily. And it's just really funny because I've never heard of Lubbock, but when I realized how great of a market it was, I was like, wow, never would have known that. So probably about 3 weeks into the deal during due diligence, we lost it. We were super devastated because we were going to have our first chance at raising capital, which is bringing private investors into the deal. And we had already started that piece. And also we were going to be asset managers, because you have to really follow the SEC guidelines and make sure that you're doing things that are lawful when you're dealing with multifamily. So make sure you really get versed with the laws and make sure that you're doing things the right way, because it's really important. So we were going to learn how to get the property manager in, how to turn the units, meaning that getting them renovated. There's so many different pieces. That's why I'm going to take several videos to break down multifamily and apartment syndications to you guys. So we lost that one and we were super devastated because we were like, we're so close to getting our first apartment. So after that, we just decided to keep going, and we found a couple of other great people, and we all realized that we're great at raising capital. We have great relationships with other investors that have capital. So we said, you know what? That's what our goal is going to be. That's where we're going to focus on. So we realized we were going to be great and had great networks of capital. We kind of broke it up into what our individual niches were and focused and targeted our goals to that. And because we realized that raising capital was a strength for everyone in the group, we then started acquiring and finding more sponsors that were open to sharing their deals with us so that we could come in on that and learn how to manage the asset with them as we went. So this is our journey. And as we just continue to look at deals and try to bring deals to our sponsors that fit their criteria, my mom happened to go to a great conference hosted by Bigger Pockets. She met an owner and operator of a commercial asset and has been doing it for many, many years along with her team. And they showed us an opportunity of a lifetime that we had never seen anything like before. And remember, guys, I've looked at over 200 properties by now, B and C class properties, and none of them were anywhere near as good as this opportunity. And it's so funny because along our journeys, sometimes we get so discouraged that we think it's going to happen a certain way, and then a great opportunity comes out of nowhere and you just can't believe what you're seeing. So we were able to successfully bring investors to that. And that is my journey. I actually am a general partner and an owner of an asset, an A-class asset in Athens, Georgia. And that asset is absolutely amazing. And I'm going to share that as a case study for you guys to learn more and to educate the audience more on multifamily syndications, because I think it's a great example to get started with. Also, even though we closed on it, there are still 8 slots available for us to bring more investors into that deal because we just closed in December. So if we have everything we need to close, the lender will allow us to close, but great owner and operators always have additional reserves. So that is something that is really, really important, is that when you get into multifamily, you want to be in with great sponsors. And you can actually get in sooner than you think with no money or other people's money. There's so many different ways you can get started with investing in apartments. So that's why I thought it was really, really important to start making videos about this and to really share this with people, because investing in multifamily is wealth building. It is something that is going to solidify your future, your children's future. It's going to really increase the value of your portfolio. Even if you only own a small percentage of a multifamily building or apartment, you still get all of the benefits that people who own a larger portion than you do. So it's super powerful, and I'm so glad that I learned about it and found out about it. The journey has not been easy, but I feel like it's worth it. So without further ado, I'm going to bring in the next videos, show you this amazing opportunity, and maybe you can jump in with me and be part of it, because I haven't seen anything this great ever in the last 2 years that I've been analyzing deals. So thank you for tuning in. If you found any value whatsoever, make sure you click the like and subscribe button. Also, if you have any questions or any topics about multifamily that you'd like me to cover, make sure you comment below and put that in there. Even any comments or suggestions, thoughts, please make sure you leave a comment so that I can reply to you and definitely interact, because I want to hear from you guys. And I want to make sure that I'm talking about things that are important to my viewers. Thanks for joining. See you next time.